So I think the base case scenario is that Democrats are expected to pick up the House of Representatives and Republicans are expected to maintain the Senate. I think the question mark that's really going to be watched by many is by what margins. So in terms of picking up the House, the Democrats need 23 seats. The range that's being proffered is anywhere from 25 to 45 seats.
Is the Citi view that a mixed Congress between Democrats and Republicans, and obviously more political debates, even political volatility, will that help U.S. equity markets, or could it hurt?
Yeah, well, I think if you look historically, markets have always rallied for long periods of time after the midterm elections. I think this time may be a little different in that we have a very different economic cycle, a very long business cycle we've had, as you know, Paul. We're in a period of rising rates. We are getting to a mature bull market, so I expect you'd have a more muted outcome if it's positive. But if the House does win, which is our base case, as Candi alluded to, I think that bodes well for infrastructure spending packages and getting passed, which could be very positive for markets.
How does Citi's view on these trade skirmishes will end? I mean, is this something that's going to end sort of benignly and this year, or is this something that's going to be prolonged and really have some dramatic impact on the global economy?
Yeah, thank you. I think what we're seeing is certainly in Washington D.C. is that the trade skirmish is more than just about trade and tariffs, but really a push by the U.S. government to get some potential changes to national security. And I think there's growing concern that what was sort of presumed to be a short-term issue is now a longer-term challenge. And so we are anticipating the U.S. government applying new additional tariffs of $267 billion. And we're all trying to figure out, what then happens next if the long-term goal, which appears to be some of the message coming from Washington, is to have U.S. businesses change their supply chain. So I think it's still too early to tell completely if this is, a decade in the making change, or if we're talking about a year or two. But it's certainly more than a few months.
We're, as a House, still overweight on emerging market, especially focused on Asia. But Asia is, because of these trade negotiations that Candi was talking about and prolonged, the markets have really been hit. Asian equities down 12.8% so far this year. There is a discussion on Asian equities being undervalued, but the question is, from a Citi view, is there still real value, is there still underlying value in the Asian equity markets?
Yeah, I think, Paul, there's a couple of points on that, and if we look at China specifically, so China has largely transformed itself from a construction and investment economy into a consumption economy. And China is trading at 11 or 12 times earnings now. We haven't seen those valuations since about 2015, when the world was very concerned about a hard landing in China, and you had a 40% odd drawdown in the Chinese market. From peak to trough, when the tariffs that Candi was talking about were first announced, we've seen a 25% drawdown in Chinese markets. That may continue a little further, but if you're putting money to work over the next 6 months, I think it's going to be, eventually, you're going to get paid, as I said, for taking that risk over time.
We hope you find these insights interesting. For more information, please speak with a Citigold Relationship Manager.